Here with CFP and investment advisor Aaron Vincent, CFP Matthew Decker, talking about the three key pillars of retirement planning: taxes, risk management, and determining your income strategy. 770-741-0120. Let's have a discussion about one of the unknown factors in our portfolios, and that's fees. But before we get there, Matthew Decker, somebody makes a phone call this weekend. They take advantage of that initial no-cost, no-obligation consultation. Walk me through that first appointment. When I walk through the doors of the Vincent Financial Group, or I have that initial consultation via Zoom or on the phone, what can I expect?
Well, you can expect that we're going to do our best to give you exactly what you want and what you need. And so we're going to sit down with you. We're going to talk about why you're here. What is it that sparked the call or the conversation? What happened in your life recently that made you decide, you know what, it's time to give these guys a call? Because it's different for everybody. It may be that you're worried about taxes, your income in retirement. It may be that you're exploring a new job opportunity. There's all kinds of reasons that people come into the office for that first time. Our goal is to make you feel comfortable and to scratch where you're itching, ask you some questions, figure out who you are, where you're trying to go, where you are right now. And ultimately, at the end of that first meeting, we're each going to kind of decide, are we a good fit for one another? Do you like us? Do we like you? Is this going to be a thing that we're going to enjoy doing? And then we're off to the races.
We want to know if the services that we offer are aligned with what you want, because that's number one. Like, this has to be a mutually beneficial kind of a relationship. That's what this is. And so nothing's worse than finding out, 6 months or a year down the road that, this actually wasn't what I was after.
Yeah.
Right? And that's part of the first meeting.
I like to say we specialize in happy clients, and you only have happy clients if they know exactly what they're getting and they actually want what they're getting. Yeah. And so, we definitely don't want to be working with people that don't want what we have to offer.
Right.
Is it fair to say that initial consultation is kind of like a first date? Just kind of get to know each other a little bit. Yeah. You're not getting to the X's and O's yet.
I don't know. It's been a while since I've been on a first date.
Good
I don't
answer.
know what those look like anymore.
I couldn't do it. Could you imagine getting back out in the dating world right now?
No.
It'd be impossible.
I think I just wouldn't.
Me and my wife have that discussion. It's like if something were to happen to one of us, she'll be the first one to say, no, I'm done. I'm not getting back out there. And, of course, my response is, it's not going to get any better than this.
Just go on a reality TV show.
Come on.
That's what you got to do.
That's what it is. 770-741-0120. To schedule that initial consultation, again, it's no cost, it's no obligation. They want to sit down with you and help understand what do you need to reach the retirement of your dreams. 770-741-0120. All right, gentlemen, so recently I had to put my car into the shop. I had to get a rental car for about a week or so. Got the bill. I expected it to be so much. I understood the rental fee was going to be so much. But then there's that line-by-line item at the end of the invoice that included a fuel surcharge, even though I filled the car back up when I turned it in. There was a little bit extra.
Well, Mark, when you rent a Bentley, that's what happens.
Listen, don't put my business out there.
All right.
Also, a delivery fee. How did I have to pay a delivery fee for a rental car? I thought you had to pay that when you bought a new car. That was on top of the mileage fee, because apparently I went over on my miles. So then you had to pay more on top of that. And, of course, the rental. All these unknown fees I was not prepared for. Now, of course, I shake my fist and I wag my finger and then I pay the bill and walk out and I just curse under my breath the whole time. But this is like something that you deal with almost every day. Finding those hidden fees in retirees and pre-retirees portfolio. How many people are also caught off guard?
Yeah.
Oh, they're all over the place, the fees.
I'm
surprised you didn't get a free rental, though.
Why is that?
Well, you took it into a shop. It was going to be a long time. They didn't do something for you?
Wow. No, they pointed me and they said, you can call these guys and get a rental car. Yeah, exactly.
Well, that's too bad.
I know.
I think people come in with unknown fees every week. Would you say it's every week?
I think it's probably weekly, at least once a week.
Yeah.
Yeah, no, I think sometimes people are aware. Like, they may not have it diagnosed already, but they definitely have identified some discrepancy. There's that camp.
Hey, the market's growing really fast, but my stuff's not.
Right.
What is the answer there? Sometimes it's fees.
Sometimes it's fees. Then there are the ones who just don't have any idea.
Yeah.
And this is more, so if this is you and you're listening, you're in good company. There's no criticism here. It's very common where someone says, I'm paying 1%. I know that's what I'm paying, and that's just what it is. What do you guys charge? That's kind of, and I always kind of internally smile when I hear that, because maybe 1 in 10 times that someone says that sentence, it's actually true. What's more common is that, yes, the advisor that you have hired, their advisory fee is 1%, kind of like you, Mark.
Isn't that all that matters?
Right. We're getting there. It wasn't all that mattered to Mark at the rental shop.
Oh, okay.
And so the rental fee was whatever, $99 a day. Like,
It was a 1994 Ford Taurus too. That's what threw me off
Well,
so much.
There's a surcharge for a classic.
There really
it's a classic.
is.
Yeah. You can't find those anymore.
That duct tape to hold the roof together was nice.
So they're quoted this thing, take it at face value, and then find out, through conversation that there was actually this surcharge. There were trading costs on top of that because you're going to manage your portfolio. You got to make some trades. And then there's all these other, kind of, it looks like a cell phone bill or a car rental bill at the end of the day, but you're convinced you're paying 1%. That advisor didn't necessarily flat out lie to you, like just bold-faced lie, but it was maybe a lie of omission. His or her fee might be 1% for the advisory side. Then there's all the costs of managing your portfolio that are above and beyond that. Next thing you know, you're paying 1.5 or 1 3/4, which is more the average. And so,
by the way, this happens all over the place.
Oh yeah,
Like this isn't just John Smith agency around the corner. He's an independent guy. And no, this is happening at the wirehouses. This happens at the big banks. In fact, earlier this week, had someone send in their portfolio for one of our free portfolio reviews. They wanted to make sure that their risk was lined up and that they were, keeping track with kind of the market. So we do this free portfolio review. And I asked the question, how much are you paying in fees? And he's like, I'm paying 1%. And I know it's 1%. I'm with a big giant bank, one of the biggest ones that's out there. They said it was 1, it's 1. And I'm like, okay, great. Well, I get the statement, I pull it up. It's more like 1.2. And then you look where it has the fees outlined and there's a little asterisk there. And you're like, okay, I know what that means. It means that there's not the full story encapsulated in this one line item. You go find the asterisk and it's like, hey, this is the fee for the advisor. This does not include trading costs. This does not include any additional fund fees. There's all these does not include, does not include, does not include. And I'm like, well, there you go. You're not paying 1%. You're actually paying 1.2. And that's not all the fees that actually exist. This is not a wrapper fee, which would mean the total fee. This is just one of the fees, similar to your car rental experience.
Yeah.
Happens all the time with just about everybody.
Right. And then how many times do you find as you take a look that someone is paying those fees to help pay for someone's extravagant lifestyle? Because if they have so many fees with so many products, then that company will give them so many things on the side. I'm not saying it's shady, but it's almost like, are you paying in those fees to make somebody's life better that's not ultimately helping yourself?
Are you trying to get us in trouble?
I've heard horror stories about that before.
No, it's true. It does happen. Thankfully, let me say this. It does happen more often than I think any of us would like to know or realize. But thankfully, it's more rare than you might think. At least I don't come across that often. I think that the trick with this is that fees aren't bad.
Yeah.
Like fees in a vacuum aren't a bad thing. But the real follow-up question in the fee conversation is, what are you getting for your fees? So
what's the value?
What's the value that you're getting? And that's the real way. You can't put a value, or I'm sorry, you can't put a, is this a good? You can't assess a fee just based on my fee is 1 point blank.
Oh, that's bad.
Is that good or bad?
It's bad.
It's impossible to know. Or my fee is only 0.5%. It's 50
that's good.
basis points. That must be good,
That's
right?
good.
That's an impossible conversation or an impossible question to ask without also knowing what are you getting for that 1.25% or that 50 basis points. You might decide that I'm not getting much service, I'm not getting professional management, and I'm not getting any tax planning or income planning, but I'm only paying 50 basis points of a fee, and that's all that I want. Then good. You've found what you should have. But what often happens is I'm paying a high fee. I know that I am. And so therefore I'm getting high service. I must be because I'm getting paid.
Take it one step further.
Right.
You might be paying, it doesn't matter what the fee is. You're paying a fee and you think you're working with a retirement planner. They're going to help prepare you for retirement. And this has happened recently. Someone comes into the office and they're like, I'm ready to work with you guys because I'm just now, for the first time in my life, understanding the difference between someone who specializes in retirement and someone who's a broker or just a money manager or just an insurance agent. It's happened several times in the last couple months. And typically it is around things like, taxes or income planning. Hey, I need some income. So I call up my guy and I say, I need $50,000. They sell some stuff. And then I look at my taxes at the end of the year. And I'm like, what the heck just happened? Call up the broker, and their response is, well, yeah, you told me you needed 50 grand, so I got you 50 grand.
I'm
What's
not
the
your
problem?
CPA.
Yeah, I'm not your CPA. I'm not here to consult on your taxes. Like, I'm not. So there's a huge difference between working with a retirement planner and working with a money manager or an insurance agent or a broker. And so we're talking about what you're paying in fees. I would say, well, you better be paying a different fee for those different levels of service, because you're not going to have the same conversations in all of those different arenas.
Right.
And so, yeah, how can you assess if the fee is worth it in terms of the value that you're getting back?
Recently, we were down in St. Augustine for the Bill Murray Caddyshack Charity Golf Tournament, where it helps to benefit a bunch of local charities in the area, including a convent. Do you know that Bill Murray raises money for retired nuns? I'm not kidding. That's Bill Murray, not trying to be funny.
That's news to me.
It's really, he helps sponsor food banks and some of the local charities and for the convent down
Good for
there.
him.
Wow.
Yeah.
Good for him.
It's a great 3-day event. Music, golf, food, drinks. We had the opportunity to sit down with Bill Murray and his brothers. And speaking of fees, putting on this event, there is a lot involved. And they talk about some of the unknown fees, a part of the Bill Murray Caddyshack Foundation charity event.
Sometimes when you check out of a hotel, you get a parking fee when you don't have a car. That's, to me, is the most surprising.
Resort fees at my family's houses.
Well, it's got to be overdrafting, right? Okay. Yeah. No, I hate to be kicked when I'm down.
That's it, man. Some of the other fees that everybody has to deal with. So you're not alone if you're listening. Even the icons, the A-list celebrities, still have to deal with fees.
Well, it's hard to find out what the fees are going to be.
Yeah.
Right.
Yeah.
I mean, you don't know when you go to sign those initial documents. Like, you don't know what your annual statement's going to look like. You don't know what you have to ask the question. You have to know what questions to ask. And sometimes it's hard for Aaron and I to figure out what questions do we need to be asking.
Yeah.
And so I can't imagine how difficult it would be if you're someone who's, head down, worked hard your whole life, saved most of your money into your 401k, and then you get to retirement and you're like, all right, I got to take my 401k, which I haven't really thought about because, you can't touch it. It's not accessible to you.
Right.
And now all of a sudden it becomes accessible. And now it's not kind of this thing that maybe your company is administering. Now it's like, no, it's my job to administer all this money that I've saved for all these years. How do you even know what questions to ask?
Is that a problem with the DIY method of people who go in at it alone? Like you just said, you've got your head down. You're not 100% sure what you're dealing with. Tell me some of the pros and cons of people who come into you and say, hey, I've got a good portfolio. I'm pretty proud of it. I do most of it by myself. I just need help with this and this. Do you find that's a problem?
I think a lot of people make the mistake of thinking that it's just as simple as the information you can find online. Mm-hmm. So if I'm willing to do a little bit of Google research myself, I can build a portfolio as good as anybody else. It's all online. And why would I pay someone, if I've got $1 million and it's 1% a year, that's $10,000 a year. Why am I going to pay somebody $10,000 to do what I can do if I'm just willing to type some things into Google Finance real quick?
I can fix my sink.
Right.
Why can't I do a retirement
There's
plan?
a YouTube video for everything, so why can't I do it myself? And I think, hey, look, for some, you should do that. You should try it. And maybe it'll go really well for you, and maybe it won't. But the reality is that at least you'll know. And the hard part is that there's so much that goes into being a retirement planner, as Matt was saying earlier. That is so much deeper and so much more detailed and so much more fine-tuning and expertise is needed to be a retirement planner than it is to just manage a portfolio. The saying that we've all heard 1,000 times, it's not what return you get, it's what you get to keep. Mm-hmm. So after fees, after taxes, after all that stuff is done. And so one of the things that we talk about a lot is even if it's a DIYer or it's someone just anyone who's not paying for professional management and wondering if they want to pay for professional management. The question that we'll often ask is, okay, well, if doing this yourself, how will you mitigate volatility? And they'll say, well, volatility is just you can't, right? Because volatility is volatility. Markets go up, markets go down. I'm okay with volatility. I'm like, well, good. As a investment manager, volatility is not a bad thing. It's just kind of comes with the recipe, right? But when you begin to switch gears and now you're managing a retirement portfolio, you're withdrawing income from it, avoiding some volatility is critical. It is a huge needle mover in the equation of a long-standing healthy portfolio that produces income for the rest of your life. Managing volatility, mitigating volatility is huge. Well, that's where picking stocks and doing some stock research or ETF or even if it's mutual funds, that is not going to get you a smoother, less volatile portfolio. That's a return focus, not an income focus. And so just that by itself, even if we stopped there, there's way more than that to it. That, as studies have shown for decades, equates to returns or keeping more money in your portfolio exponentially more than the fee for a good retirement planner who also manages the money for you. It's a huge difference.
Yeah, there's a huge difference between building up your nest egg, accumulating dollars, and distributing those dollars in a tax efficient, primed for market volatility, thinking about the next 30 years methodology. Like that, those two things couldn't be more different. Right. Growing your money versus distributing money. Aaron, what was the question that you like to ask people? Oh, what's your plan for volatility?
Yeah.
Yeah. A second question would be, what's your plan B if things go wrong? And most people don't have an answer to, well, what's your plan B if things go wrong? Like what? Yeah, you've done great for the last 10 years. What if you don't do great for the next 10 years? How does that change your retirement situation?
Google. I'll find another YouTube video. I'll see what they say.
A lot of people say, I'll go back to work, I'll get another job. And if you don't like that answer, well, then to me, as someone who does retirement planning and knowing what plan Bs can look like, I would say there's most of the value right there in planning for things that are unexpected, that you can't control, and having answers for some of those problems beforehand.
Yeah.
It's the whole idea of giving you peace of mind. It's the difference between being wealthy and being rich. If you have answers for things that could go wrong in the future and you know how you would move, you know how it would change your lifestyle, that gives you so much power in the present moment in decision making. And without that, I just don't know how someone does it. No. I don't know how you can feel good about the next 20, 30 years of retirement if you don't have answers to some of those types of questions, like what's my plan B? How am I going to deal with volatility? And I guess I'd just say this is a conversation that we have every single day. And so if you'd like to have this conversation with us, if you think that maybe we're a safe place to explore some of these complicated topics, give us a call, 770-741-0120.
And so here's the rub. So we're having this conversation in relationship to fees. So if you're someone who's like, no, I love this stuff and I love learning, and the risk of learning some lessons, even some tough ones along the way, are worth it to me because I want in my retirement to manage my own portfolio. I enjoy it. Then great. That's what you should do. You shouldn't hire someone if that's how you feel. We're having this conversation in regards to fees. If you are not considering hiring somebody or if you want to go it alone simply because you think the fees are a ripoff or not worth it, then you've ventured into this world of the cost to repair a broken portfolio 5 years into retirement is so much greater. I mean, exponentially greater. I don't know how many times greater, but a lot greater than having it managed professionally and well and checking in regularly and able to assess it regularly. How did we do this year? How did we do this quarter? What adjustments should we make? Managing it in those terms, kind of ongoing, is way less expensive. It's way more cost efficient than going it alone for a while, learning the hard way, and then trying to repair it. You'll pay exponentially more in fees to get back where it should be, if you can even get back to where it should be, if it's not too late.
Yeah, this is a tough quote, but I heard it recently, and it was, "What are the two biggest expenses in your lifetime?" What are the two biggest expenses in your lifetime? And me being the financial planner, I'm like, retirement planner, I'm like, oh, I know what the answers are. The first one's taxes. And this guy's giving this presentation. He's like, number 2 is taxes. And I was like, dang. I thought for sure that was going to be number 1. And he goes, what's number 1? And he's asking the audience, and nobody has a clue what number 1 is. And I didn't have a clue because I'm like, taxes is number 1. So if taxes is number 2, I really don't know where this guy's going.
And we'll tell you number 1 right after the break.
Yeah, exactly. 770-741-0120. No, he goes, the number 1 biggest expense that you are going to pay, that I'm going to pay, that we're all going to pay in this life is ignorance. Our own ignorance. Our own ignorance is going to cost us more than anything else.
So it's still a tax. It's the idiot tax.
The idiot. Well, I didn't want to say it like that because that seems really harsh. But yeah, ignorance. And I'm like, man, that's great. Because how many times have I made mistakes that cost me in big ways? Maybe not just with my money, maybe emotionally. emotional mistakes, relational mistakes that were made out of my own ignorance. And it's just so difficult in this world of ever-changing regulations, changing products, changing policies, changing fee structures, tariffs, taxes. Everything changes all the time. I feel like we're constantly reinventing ourselves and our process. I'm talking about Aaron and I. We're constantly reinventing our process just to deal with all the changes that come every single year. And I don't know how anyone who's had their head down for the last 30 years working hard, just not in this industry, right? Working hard, saving money, preparing for retirement. I don't know how anybody who's been in that boat can get to retirement and not get away with the ignorance tax if they're not working with a professional. Mm-hmm. It's just going to happen. And I hope that it doesn't happen, because it doesn't have to. And like you say, you hit the nail on the head. Paying for professional advice, maybe you don't like the way that feels, but man, it's going to beat paying for repairing something that is broken that maybe didn't have to be broken.
Yep.
But how much do you find that we have control? Like, let's talk to the DIYers out there. Someone controls 80% of their portfolio, lets you handle 20%. That feels off balance. How much control do you want us to have if we work with you and work with the team at the Vincent Finance Group? Do you want us to just be able to understand what's going on, talk to you, have a good knowledge, or do you like it that we have, all right, I've got my 401k under control, I'll let you handle taxes? Does that question make sense?
Yeah, I think, well, I'll ask it this way, or I'll answer it this way. Most DIYers that I talk to are not doing it just because it's fun.
Yeah.
And they're interested. They're doing it for some fear of being taken advantage of, or it's a defensive move. I'll put it that way. It's not offensive, like I want to do this, I want to learn this, I really enjoy it, and I'll take the costs. They're doing it for some defensive move. I want to protect myself from getting taken advantage of, or someone, nickel and diming me with fees or whatever it might be. And if that's the case, then, I think the mindset's got to change before the portfolio can change. We'll put it that way. Now, the trick, or one of the reasons Matt mentioned our process and how we reinvent it, and how we've been doing this for a long time, and our process, I think, is the thing that we are most proud of, or one of the things we're most proud of.
Definitely.
And that's because with our process, you get to see the before and after. One of the things that we do not like about the financial services industry, if I can say it that way, is that in most cases, you as the prospect, the client, you have to buy it before you try it. A lot of promises, hey, you come work with us, here's our fee, we promise you're going to get this, 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 and this. Sign here, move your money to us, we'll begin to charge the fee for you, manage it, and this is what you're going to get on the back end.
And we'll check in 2 years.
Yeah, we'll check in with you.
Yeah.
Well, you have to buy it, you have to sign on before you can even see it and try it. Our process is designed to be different, where we're going to walk you through what it would look like and feel like, and actually the results of being our client, what that will actually look like and feel like for you before you sign anything, before any money moves. And so I think for a DIYer who wants to consider professional management, who's playing defense, I don't want to get taken advantage of, you get to see it before you sign on for it. And I think that's huge.
And that process begins with the phone call, 770-741-0120. Again, 770-741-0120. We have a representative standing by right now to talk to you. We know you got a lot going on this weekend. It's the end of the weekend, starting to get ready for next week. So when you make the phone call this weekend, a couple of quick pieces of information, like a name, a phone number, an email address. What are you worried about? What are your concerns? But the most important question they will ask you is, when is it convenient for you to talk to the team in a long-form conversation at the Vincent Financial Group? 770-741-0120. Again, 770-741-0120 are always available at retireatlradio.com. Aaron, Matt, thank you for the education and the information this weekend. We invite you to get more, including the Retire ATL podcast across all podcast platforms, or at the homepage at retireatlradio.com. We're back next weekend, but for Aaron, Vincent, and Matthew Decker, this has been Retire ATL right here on WSB.